Hello again, and thanks for joining us in another edition of MPA TV. I'm Fergal McAlinden, and for our usual presenter, Paul Lucas. As ever, it's been a rollercoaster year for the US mortgage industry, with plenty of food for thought as we near the end of 2023. This year's market has been a challenging one for brokers and their clients, but that's not to say that there hasn't been opportunity and room for optimism as well. So today we've gathered a panel of leading mortgage professionals to discuss some of the approaches that they've been taking in the market in the year to date, and how brokers can win in today's ever-shifting mortgage climate. I'm very pleased to welcome Darius James, President and CEO of Porch Mortgages, Chelsea Balak, Vice President of Operations at Wemlo, Kevin DeLory, Chief Operating Officer and Partner at Equity Prime Mortgage, and Jon Tallinger, Chief Growth Officer at Valuation. Okay, great stuff. Well, Chelsea, maybe I will start with you. As I mentioned, it's been a challenging year for the mortgage industry to date, but there have been some areas of optimism as well. And I'm wondering what some of the positive trends and changes are that you've seen this year.
Yeah, this year we've seen a lot of new products being added to the market. I think it's a great thing that different borrowers from different backgrounds are now having an opportunity to get loans. And so adding in that diversity is always a great thing. I know it's a challenging market, but growing in that area has been really great for not only our business here at Wemlo, but I'm sure for the borrowers out there as well.
Okay, great stuff. And Darius, how about for you? Any kind of positive trends, changes that you've been noticing?
Yeah, I know that most people think that it's a tough market, right? It's not normal, the market that we're in right now. But I think that it's just perspective. What I'm seeing a lot of wins in this market, not just for my company, but loan officers nationwide, is the group of borrowers that are out there right now. When we were in 2019, 20, and 2021, right, interest rates were really, really low. So there was a whole group of borrowers that were overlooked. And that group of borrowers are not the best qualified borrowers, right? They might not have the best credit score. They might need down payment assistance because, hey, the economy is bad. How are people going to save to have down payment and things like that? So to just piggyback off of what Chelsea said, not only that, I think the reason we're seeing so many more products come out there is because when markets contract like this, we have to look at the borrowers and make sure that the products fit the need in the market. And there's a need for mortgages out there, even with high interest rates. We just got to make sure we're catering to those clients. And if you target your business to make sure you have the product, the customer service, and the right people to help those subsets, I think you can win in any market. And that's what the wins are right now.
For sure. And as you said, Darius, the presence of that demand is still such an opportunity for mortgage professionals today. Kevin, how about for you? Any kind of trends or changes that you've been noticing in the market recently?
Yeah, I've seen more. I think it's definitely a better market for the borrowers. I think John sure says it all, borrowers are best. I think we've seen more people, flee retail and go to become a broker because there's more opportunity to do what's right for the borrower, do what's best for the borrower. Now they're able to shop 6 or 7 different lenders to find the best program, the best rates. So I've seen a huge opportunity in the smaller brokers as they continue to grow because they're attracting that top talent away from retail where there's one option. You come to them, it's one option. Here's the rate today. This is the rate you're going to pay. This is the cost. Whereas a broker is able to negotiate all of that on behalf of their borrower. So I've seen brokers continue to grow. This is why at EPM, we double down on wholesale. It's not about wholesale. It's about the broker community. And we're watching them just continue to grow and continue to evolve to become a bigger part of helping those homeowners get into a home or refinance.
Yeah, for sure. And the importance of brokers, as you say, always comes into light at a time like this. Jon, how about for you? Have you been noticing any kind of trends that are standing out for you at the moment?
Yeah, so some really good points by the other 3 panelists that I'll kind of add on to and piggyback a little bit. So at the end of the day, I think a lot of people in the mortgage industry, in a lot of instances, by no fault of their own, had to adjust to the market. And, we went through a market shift in 21 and parts of 22 where rates were so low, refinances were falling out of the sky. And, we're not back to normal yet, but there's going to be a new normal eventually once things settle in. And I think we're really already getting back to putting the importance on what's best for the borrower, like Kevin and Chelsea and Darius kind of said, what can we do to best serve this borrower? What kind of products can we put in front of them? But I think what we're also starting to see is a lot of natural attrition right now of we're starting to find out who the winners are and who the losers are. We're going to see a lot of continued attrition of loan officers, loan originators who aren't working hard in this market where they have to be working hard to make the same or less money. And I think that the true winners, the truly driven originators are going to sort of rise to the top. And I think we need to start looking more so at loan officers and loan originators really as mortgage advisors, because we get away from just getting this person into a loan because you want to close a deal. Really figure out what's best for these borrowers. How can we help them out? How can we put them in a better situation, short term, midterm, and long term? And I think that with some of the thinning of the herd, we're starting to see that. We're seeing the hustle, the rolling up the sleeves, and hey, how can we really help you not just close a loan, but get you in a better position so that you are in a better financial situation, or that you're getting into your dream home and you and your family can start doing your planning going forward.
Absolutely. And actually opportunities to grow that market share. That's something that I want to talk about a little bit later on. But Chelsea, it's interesting. Affordability and interest rates, they were some of the main things that you all mentioned in your answers there. And obviously they're a big obstacle for the market at the moment. For borrowers, I'm wondering if there are any kind of controllable actions that you think could be taken to maybe improve that situation.
Yeah, of course. Just like Jon had mentioned, the people who are really working hard out there right now and grinding, they're educating themselves, right? They're educating themselves on different products. There's so much that you can do for a borrower right now. Like Darius had mentioned, the DPA loans, there are rate buy downs. You can get seller concessions. There are so many ways to be creative if you're really out there hustling, trying to make a deal that's best for your borrower. And so the opportunity is out there. You just really have to be able to grind it out and make sure that you have that grit to be able to get the deal done.
Okay, great stuff. Darius, how about for you? Any kind of controllable actions that you think we could be taking right now?
Yeah, I think from a loan officer and a lender standpoint is getting to know the climate of the market and really understanding the borrower, today's borrower, not yesterday's borrower, and making sure we're catering to them. As long as you build a business as a loan officer or a lender around the consumer need and being tapped in or in tune what the consumer need is, because it's forever changing. And that's the market that we're seeing right now as a changing market. So the activities that we need to do right now is, I totally agree with Chelsea, educate. I'm for that 100%, because I think the financial literacy will open up the floodgate of borrowers. A lot of the information is just not passed down for us to know that homeownership is a real thing. And then from a lender and a loan officer standpoint, it's understanding those clients well enough to know if it's a lack of financial literacy or it's a lack of product optionality in the market.
Yeah, and that education component is always absolutely massive. Kevin, what are your thoughts on the affordability and interest rate front?
Yeah, they all make great points. I think the one that Jon made a little while ago, I heard from Chris Gordon. He calls all his loan officers mortgage advisors, because they really need to advise and educate the borrower. You can't afford that $700,000 home anymore with the higher interest rate. You should be at a $500,000 home. They might be looking something that's not realistic. They think they want it because they could have gotten it 2 years ago when the rates were 3.5. And it's really advising them and educating them. And then and the other thing is not letting the transaction. The people that are leaving the industry today only cared about the transaction. They cared about the payday to get that borrower at the closing table. It's the ones that continue and realize the relationship starts at the closing table and said, hey, once you close, hopefully you're my customer for life and I stay in touch with them. It's not, hey, it's over when I get my paycheck. That's why the people that are waiting for that, to wait to get the paycheck, won't be in the business for the refinance boom when it comes in, 6, 12, 18 months, whatever it's going to be. So it's really about educating them, being upfront and honest. What I tell my people, and you're only as good as your word, your name, and your reputation. So as a loan officer, don't overpromise and underdeliver. You got to explain to them, this is the way the rates are. If you like the house, that's what you should be buying, not the interest rate. It's the same way we tell loan officers and account executives, you can't spend basis points. You spend your money that you make off those basis points. So, you just have to be realistic with some people, because some people think, I can get in that house with a 52 back end. Now, they may qualify, they may get a DU approval, but is that what's best for them? You have to be honest. Are you sure you want to live with a 52 back end? You sure you want to be able to pay that just living to get the house? Or do you want to be able to enjoy yourself, still go on that trip once a year? And that's why I like the word mortgage advisor. Loan officer, I think, kind of cheapens it down. A mortgage advisor, like a financial advisor. I go to them and they trust them with my money, that they know what to do with my money so they can make me more money and then I can retire someday. A mortgage advisor should be looking out for your best interest, regardless of what the market's doing in interest rates, to explain to them, do you really want to be tied to this house for 50% of your income to go towards all your debt? And after taxes, you're left with $1,200 a month. What are you doing? So I think that's the key, regardless of the interest rate, is to educate them that these rates aren't going anywhere anytime soon. If you really love the house, let's make sure you can afford it. And then be realistic. Even at a 45 DTI, I would challenge people, it may not be the right house for them if they want to continue the lifestyle they have today. So it's about being honest and upfront. And that's why being an advisor is you're advising them the right thing to do. Now, if they decide that they want to be tied to that 45 back end, there's nothing you're going to do to tell them they can't. And you can only educate them to explain them why. So I love the term. I wish more people would use the term mortgage advisor, because that's really what you do with a loan officer. So, that's what I think. You got to be honest with them and realistic.
Yeah, for sure. Advice, education, always so important. John, how about you? Anything on the interest rate front that you think we should be keeping top of mind at the moment?
Yeah, Kevin, I think that's just really, really great points there. You really, as a loan advisor, really understanding relationships are everything, and really understanding and getting to know your borrower and getting to know what do they really want. And sometimes they know exactly what they want. Sometimes they don't know what they want, but educating them with those options goes a long way. I can tell you the house that my wife and I are currently in now, when we bought it just over 10 years ago, we knew that we were going to take, we were going to be house poor for a little bit, but we knew that this was a great house, it was a great investment, but we were fully aware, and we had a great mortgage advisor working with us, talking through the different scenarios and really laid out, hey, look, this is where you're going to be down the road. Are you thinking about, are you guys going to have more kids? I've seen some people in this market where people are because of the lack of inventory, people are settling for houses that they maybe don't necessarily want. And, there's one in particular that I saw locally where a couple was buying a house because they had missed out on bids on a couple other ones. And this house is on a busy corner. There's some external obsolescence, some road noise, and tried to explain to them that, hey, is this really the right house for you guys right now? You're starting a family. The reason that it's available right now is going to be the same reason that you may have trouble selling it down the road, because maybe there's some issues that are not going to appeal to as broad of an audience down the road. So that, again, education, I can't overstate it enough. There's so much information out there right now that's not being pushed out properly. On our side of the world with appraisals, the valuation space is changing so quickly. We had such a tough time in 2021 where there was such a low rate environment. There weren't enough appraisers to get those jobs done quickly. Now, because of that, Fannie and Freddie have started to really put some great pieces in place, leveraging technology, leveraging modernization. But part of the problem is they've rolled out these great programs, but there hasn't been enough education really explaining how these products and how some of these things can really help to streamline the mortgage process, maybe save some money for the borrower. So the education piece is absolutely massive. We're doing lunch and learns constantly with brokers and bringing in real estate agents. 5 years ago, we never would have thought about actually, getting in front of the agents, but they need education just like we need education. We need to find out what they're all about and what they have to offer, and they need more information on how we can help them really make this a whole ecosystem where we're all kind of working hand in hand.
Okay, it's interesting that you mentioned streamlining the mortgage process, because it kind of brings us very neatly to our next topic, which is technology. We obviously heard during the pandemic that the use of technology and the uptake of technology was really super accelerated because of work from home restrictions and all of that. But I'm wondering, when we look down the line, whether you foresee any kind of advancements, developments, or improvements going into 2024. Darius, maybe we'll start with you on that one.
I think technology is changing the entire world, right? I use technology in my business in multiple different ways. I'm a partner with Chelsea, right? She's one of my technology partners to begin with, right? But I think in the space right now is AI is really sweeping over the mortgage industry and how we can use it and how we can not only benefit the consumer or how we can help us communicate to our consumers more. AI is something that is extremely intriguing to me. I know a lot of people are afraid, does it replace the loan officer, right? Does AI replace title with blockchain and things like that? And the way I look at it is I'm a consumer first guy, right? And I think that these things can help improve the communication to the consumer and enhance the overall experience of the consumer. Some of the things that we're just doing on my team internally with AI right now, I think it's game changing of how we can touch and help more people.
Okay, really interesting. Kevin, how about you?
It's an interesting time. We've recently just tripled our IT staff because of technology. We're working on creating a site where a broker can basically upload their loan, get approvals, notify their account, their realtors, notify the borrower, whoever they want to notify, and do it all at on their iPhone, right? Because we know that everybody's on the move, everyone's on the go, especially in a market like this. If the minute that someone says, hey, I really wish I could take cash out, the first thing you want to do is get them off the street and be able to take that application. And not everyone can afford, a broker can't afford all these pieces of technology. It's expensive. So at EPM, we realize that we're creating it to give it to them. Of course, in return, the loan goes back to us. So it's in the best interest of the whole ecosystem for us. But we really made a big investment in the last 3 months of saying, we got to get on the tech train and we got to get on it quick. But we have to make it easy to use, especially for some younger people that they only know an iPhone or an iPad. When I break out my laptop, sometimes people are like, geez, that's so big. I'm like, what do you mean? It's the smallest laptop I've ever seen. You want something smaller. And they're like, yeah, look at this. And they break out their small little baby laptop and thing. And, so they want to be on the go nonstop. So we're trying to keep up with that because we know it's important. We know it's important about speed of communication. I love to use the word, I always say to my team, it's conversation over communication. But I don't think the younger generation really want to have a conversation. So these younger home buyers want to get an email saying your loan's approved, your appraisal's been ordered, your appraisal value came in. They want to be notified that way. They don't want to be bothered with the conversation, which is tough for a guy like me that all I want to do is talk. I think technology is key. The more that you add at brokers' fingertips and make it so they don't have to go and make that investment. So us as a teammate and a partner, we really believe in brokers. We say we're doubling down. We want to continue to make that investment for our brokers, for our teammates, so they could have that easy access and take an application on their phone. You got to keep up. Let's be honest. I mean, everyone loves Rocket's technology. I refinanced 3 years ago through Rocket. I loved it. It was great. One thing was one click here, click there, and it is ease of use. So if you're not keeping up and trying to make it easier to use for the next broker, you're going to get left behind. So for us, it's all about technology, and keep your eyes open. Come December 1st, we're rolling out Core, where everything is going to be done through Core, ordering titles, ordering appraisals, getting notifications, and you can do it all on your cell phone. So you just got to stay up to date what's going on around you, or it's going to pass you by.
Okay. Jon, how about you? What are your thoughts on the tech side?
Yeah, I mean, so again, we're in the appraisal evaluation side of the business, and we work with every possible channel out there, whether it's retail, whether it's the savings and loans, the banks, the credit unions, obviously very, very large in the broker space. Again, really understanding your audience and figuring out what we can do from our side to make that client experience better and as seamless as possible. And I think, Darius talking about AI, 1000% agree. There's so many good use cases where we can leverage AI and other, sectors of technology to help. At the end of the day, we ask ourselves all the time. We pulled up a couple of weeks ago all of our tech priorities with our tech team and where they were, and we went through every single one. And we talk about our company, our thematic goals, and we talk about, okay, how is this going to best serve the borrower? How is this going to best serve the appraisers that we partner with? They're the lifeblood of what we do. How is this going to best serve the broker or the mortgage advisor who on the other side? How are we going to make that process easier for them. So there's a term that we use in appraisals all the time called highest and best use. So what's the highest and best use of this particular person? You think about an underwriter. Is their highest and best use manually picking up a file and going through every piece on their own, and going through line by line and checking everything manually? Or would it be better to utilize technology to do some portions of that and allow them to focus on really the more difficult files? So I can tell you from our side, after 21, we've seen, unfortunately, the appraiser population is shrinking. It's not growing. And so I could be the first to tell you, we have no intention, nor do any of the stakeholders in the industry that I'm aware of. No one has any intention of appraisers going away or trying to replace the appraisers anytime soon. But how can we optimize their job? When I was in the field appraising, 15 years ago, I really felt like I needed to go walk through the house and be there and take the pictures and see everything for myself. Now we have data, or I'm sorry, we have technology where we can go and capture far more information than ever possible before. And the appraiser does not need to be there to do that. So, and you're going to see more and more of that. You're going to hear about hybrids. You're going to hear about desktops, even with some of the extended waivers that Fannie and Freddie have put out. And the best analogy I can use for that is when you go to see the dentist for your teeth cleaning and your regular checkup, who comes in and cleans your teeth? It's not the dentist, it's the oral hygienist. The dentist probably is fully capable of it, but that's not the dentist's highest and best use. He or she went to school, to be able to come in, and once the oral hygienist has cleaned your teeth and taken your x-rays, dentist comes in, looks at the x-rays, looks through your teeth. They actually use what what they went to school for. We're doing the same thing on the appraisal side of things, where the appraiser doesn't have to go inspect the home anymore. We have this pack of data where it uses LiDAR and it does all the measurements up to ANSI standards, and the appraiser can stay at their home or at their office and complete the analytical side of the report without having to go there. So instead of being able to do maybe 1 or 2 appraisals a day, now that appraiser can stay at home and do 4 or 5 of them, and it's making that process more scalable and far more efficient.
Okay, great stuff. Optimization, streamlining, which you mentioned, I hear about those all the time, and those are obviously going to be such big trends in the future. Chelsea, last word to you on the technology front. What type of trends do you think are coming down the line?
Yeah, of course. I can't speak for the industry in general, but definitely at Wemlo, being a technology and processing company, we are leaning in very hard into the technology sector of what we do. So we want to make sure that our processors can manage larger pipelines, and we're doing that through technology. I think a key component that each one of the guys mentioned was delegating tasks that are not special to you, right? That's the superpower of how you kind of get to the next level and how you really make sure you optimize your time and you're efficient. So we're making sure that we're doing that for our processors so they can spend more time communicating with their brokers, their LOs, and their borrowers. It's not their best use of time to do those things that technology can take away, because they could really be building better relationships or explaining confusing things about the loan process to a borrower. We can't have technology do that. And that's the great part about what we need our processors for. But I don't want their time being wasted ordering homeowners insurance or things that are just not special to who they are.
Okay, great stuff. One thing that we touched on a little bit earlier was opportunities for market share for brokers. And we've seen recent data suggesting that the number of loan originators from 2022 to 2023 may be cut in half. Maybe not surprising with the way the current market is going, but I'm wondering if you think that is an opportunity for brokers to maybe gain market share moving forward. Kevin, what do you think on that one?
Yeah, I think a lot of the order takers are leaving the business, right? I think when rates were low, they were just printing loans, right? It was just nonstop refi, streamline, and you're just going and going. And now you have to be that mortgage advisor to survive. And a lot of those people have left the business. And I expect that when these rates come back down, you'll see a lot of them running back to the business. And that's why I tell the people that are the real, heroes, the mortgage advisors, the ones that are out there keeping contact with their customers, don't give them the opportunity to get back. It's Gary Good Times, right? It's good times are back. Here I am. I'm back. Let me get some loans in. I think this is a great opportunity for the strong to get stronger, for you to continue to build your realtor base, your borrower base, continue to be out there in front of your people. So when these rates come down, it's up to the people that didn't run when the market got tough. Yeah, I was speaking this morning to Mike Cordes at Nexa, and he continued to grow. And love him or hate him or whatever from his messages, he is there to survive. He's a survivor and he's growing. And his life experience has gotten him to be this guy that just sees an obstacle and just wants to get over it. And we had the same conversation. I said, what do you think about these people? He goes, they're not, if we're doing the right thing today as mortgage, as loan officers, mortgage advisors, brokers, they're not getting back into the business because we're going to take care of it. And we're going to be able to handle that volume with better processes, with technology, with all of those things by building up their company to be ready. We don't give them a chance to get back in the business. I mean, I've been in this business 25 years and I still see some people at some of these conferences, and I look at them like I've known this guy for 25 years. He's had 4 different jobs. Every time the market goes down, he jumps out. He goes over here to technology. He goes over here to insurance. The market comes back. He jumps back in and carries this title for 25 years and has done nothing other than carry the title. So it's really the opportunity is for the brokers that are sitting there and they're continuing to do it, to continue to grow, to be ready. So, this is just a thinning of the herd that needed to happen. So they're the ones that were order takers. They're not real advisors. So just be ready. That's what I would say. Any broker, the secret is simple. You be honest, deliver on when you say you're going to deliver on something, do it. Do what's best for the borrower, because borrowers are best. Keep looking at John's shirt, but don't ever turn to the right because I can see the name of the other company. So so that's what you need to do. And when that market comes back and there are these streamlines falling from the sky, they stay with you. These people don't need to be back in our business. They didn't have the borrower's best interest because when the going got tough, they got going, right? So that's I get a little passionate about that. Sorry.
Great message, Kevin. Couldn't agree more.
Sorry, John, go ahead. What are your own thoughts?
Yeah, I mean, I'm a big motivational guy, and I think Kevin and I have a lot in common with that. And, at the end of the day, winners win. The strong are going to survive. And, yeah, I mean, Kevin and I see each other all the time on the circuit, out at the conferences. And, yeah, there's a lot of people. And look, don't get me wrong. There's circumstances, people leave jobs, go different places. But no matter what, your reputation, you build that over time. You don't build it through what you post online and what you talk about. You build it through actual performance. Are you there when I need something from Kevin and I'm a broker? I need something from Kevin and his team. Answer the damn phone. I mean, honestly, that's one of my good broker friends, top bidder. That's his favorite line. No matter what, answer your phone. That's it. Are you available? You think about reliability. If you have to drive your car to get to work every single day, and you drive a car that it's a coin flip. Is it going to start today? Is it not going to start today? Well, your boss probably isn't going to be very happy with you because it's a game of chance whether or not you're going to be there. But if you have a car that is reliable, you're going to get there every day. That's it. So same with your mortgage advisor. Are you going to go to someone who, hey, times are a little bit tough, so they're taking a little hiatus, or they're not going to make themselves available, or hey, times are really good, so that broker or that partner, hey, they're gonna take a month off and go to Tahiti and go put their out of office on. Bottom line is, like, in this world, in this business, there's plenty of competition out there. There's plenty of people out there. So answer your phone, be available. That's the biggest thing you could do. You don't have to be talented. You don't have to be good at a lot of things in this world. That's what your team is there to support you with. You don't have to know every pricing scenario, but you answer your damn phone, respond, be there, make sure that your client has that trust that when they need you, you're going to take care of them.
Okay, so consistency is key. Chelsea, what do you think?
Yeah, of course. So I think, kind of leaning on what Kevin had mentioned, that we're really going to see that number of LOs coming from the retail side. They were handed the deals over the table. They're not used to having to fight for things. And our wholesale brokers out there, they're already implanted inside of their communities. They've built the relationship. So they're really built for this market here. And we're going to continue to see them grow, especially as we kind of come into the back half of this year and beginning of next year. It's tough out there, right? So, I mean, if they're out there and they're already in the community, they have the relationships, they're going to be able to prosper, and they're going to be able to grow our broker community to even larger than what it is right now.
All right. Darius, how about for you? What opportunities are there for brokers to grow their market share moving forward?
Yeah. So if I think back to one of my mentors, Austin, he always taught me that when markets compress, that's when market share can be gained, right? And to really think about, well, how can you grow in a tougher market? It's because people leave, right? So if you double down and you really commit to winning, as John said, winners win, you can win in this market. Hey, I started in this industry when I was 19 years old. I've never had another career. I've been here consistently for 11 years. And I told myself very early on that I was going to do everything that I could, and I wasn't going to leave this industry. Because as Kevin said, I've seen it happen many times where people hop out because the market isn't hot, and then it gets hot and they see their buddies making money and doing well for themselves, and they want to hop back in, and then they're behind the eight ball, right? I consider myself a student of the game, right? I wanted to learn everything that I could about the mortgage industry so I can have a lasting impact on the borrowers, the consumers, my family, and legacy. To me, this was always about what's showing possible, and to lead the industry during tough times that doesn't show what's possible, right? I think that's cowardly. I don't run, right? I'm a military guy. We're going to conquer. We're going to win. And to touch on what Kevin was saying is, yes, you are seeing a great numbers. We've seen it happen from 2022 to 2023. We're going to see it happen from 2023 to 2024, where a lot of loan officers leave the industry. I do believe that most of it is going to come from the retail side. And the ones who aren't leaving the industry, they're just joining the broker channel, right? In a high rate market, it's not likely, like loan officers don't want rates to be high, but the channel that wins in high rates is the wholesale channel. It's brokers, because we're still going to have the best pricing. We're still going to have the best rates, even in a high rate environment. We're still going to have the best product optionality. So if I can make one call to loan officers out there, I've made my living doing this for 11 years. I've never had to leave out of the industry. I was one of the number one originators in retail. I've worked for a wholesale lender in their executive team, and here I am owning a brokerage. Why? It's because if you're a loan officer for the consumer and yourself, you should work nowhere else but for a broker.
Okay, and let me maybe stick with you for the final question, actually, Darius, just to kick things off. You mentioned that you entered the industry at the age of 19. You've never had another profession. It's obviously a tougher market now, but we're still seeing brokers entering this space. And I'm wondering, for those newer brokers, obviously entering a challenging market, what's your advice for how they should get through it? Or is there anything that they can do to keep top of mind at the moment?
Yeah, so first is be authentic, right? As being in this industry since I was 19 years old, there's portions of my life where I thought I had to fit in or be someone else to be a loan officer and to convert. I think that's the wrong approach. As I walk into every single room, I walk in as Darius James, confidently knowing who I am and what I'm capable of. So as a loan officer, and I think I can speak to it even more, because I have 11 years of experience, but I'm from Michigan. 3 years ago, me and my wife decided to pack up, move to the South, open up a mortgage company where I didn't know anyone, not a family member, not a realtor, not a loan officer, right here in Huntsville, Alabama. Why? Because I seen an opportunity, and I wanted to be able to speak to new loan officers just like you asked me. I wanted to go somewhere where my prior experience didn't help me, where my relationships didn't help me, where my uncle owning a large real estate company didn't help me, so I could build the right habits to win in any market. How you do that is you get deeply rooted in your community. You support your community. You add value in your community, and you give without any expectation of anything in return.
Okay, great stuff. Jon, how about for you? Your brokers, what should they be keeping top of mind?
Honestly, follow Darius's playbook. I gotta say, I've known him for a while, and I don't know Chelsea as well, and I know Kevin well. But there's a lot of people that you can emulate in this industry, and I see Kevin as a great presence on social media. But the thing I love most about it is the way he comes across on camera is the way he is in person. He's authentic. He's going to outwork his competitor. Like if you're on a treadmill and he's next to you, he's not getting off at first. Darius the same way. It's been really a pleasure watching him grow and really hustle. And if you don't want to come in and absolutely work your tail off, don't get into the business. Because we deal with at our company, we do more broker wholesale appraisals than any company in the industry, and we see all ends of the spectrum. Same with appraisers and brokers. There's good ones, there's great ones, there's ones that sort of work hard, there's ones that are lazy. If you can't, it's like if you want to get into a really good college, if you have kids in high school, you're not going to get into UCLA or Stanford or Harvard with just average grades. So if you really truly want to commit to doing this, there is massive opportunity, but don't expect things to fall in your lap. You absolutely have to, I say it, this is a great inspirational thing that I watch all the time is, success is not an accident. It's a conscious choice, and it's created by the work habits that your work ethic and the habits that you create every single day. That's what is going to dictate your success. You're far more in control of your own success than you realize. And I love seeing, people like Darius that, could have stayed in their comfort zone, could have stayed in Michigan where they know people, but went somewhere else and said, you know what? I believe in me. I'm going to bet on me, and I'm going to go make things happen in this market where I see a really good opportunity. So if you want to get into this business and become a broker because you want to make a lot of money, that's not the right motivation. There's Matt Ishbia, a great leader in this space. He says it all the time. Money follows success. If you build a successful team, you build a successful program, money is going to follow. And so that's what you have to focus on. If you're coming into the broker channel, come in, be the best at what you do, answer your phone, and your success, your money is going to follow along with that.
Yeah, for sure. And I hope that we're getting plenty of newer brokers watching this because they're getting some fantastic advice so far. Chelsea, how about for you? What do you think newer brokers need to focus on at the moment?
Yeah, I think we kind of mentioned a couple of them. Really, communication is key at this point, staying top of mind with realtors, with borrowers, advising them as much as you can. And education is really up there as well. So staying on top of market trends, making sure that you're a resource to your partners. And the last one, I think, is really making smart business decisions. So margins are really crunched right now and compressed. And so making sure that you're partnering with a processing resource like Wemlo, because it is third party, it's zero cost to you as a broker partner, making sure that you're making those smart decisions so that you can run the long haul with a business is really important, especially during this market.
Okay, great stuff. And then Kevin, last word to you on this question. Newer brokers, what do you think they should be keeping top of mind?
I think, don't look any further than what Jon said. Darius, it's about education. It's about finding a mentorship. I'm lucky enough to have a group of people like Darius who become more than just partners and teammates, become really good friends. Lamont, Chris Gordon, these guys come out, Lindsay, Kelvin, they all come out once a month to EPM to find out what they could do to be better, whether we're talking about leadership, culture, content. And the same people show up over and over. And it doesn't shock me that those same people are having success in this market. And, Jon, I thought I coined the phrase, I guess Matt might have said it too. I mean, if you chase success, money will follow. And but these guys also have mentorships, and they form this group, and then where they share information. They could be competitors in the same market. I watched two brokers in California sharing what's working and what's not working. Now, most people might say, well, why would you do that? That's a competitor, because they all want to see each other win. And that's what you get with that broker community. The one thing I'd like to see the broker community do is really start develop like the realtor community. A community is made up of the people. It's not made up of the association that is in charge of the community. It's not like the HOA is not the neighborhood. The neighbors are the neighborhood. If we could these brokers could somehow figure out how to get together like realtors. There's a reason realtors still make 6% and they can only make 3%. Why? Because of advocacy and the power in numbers. That's one thing I'd like to see change. If you're going to be a broker, somebody needs to stand up and say, we're stronger together. Because I watch it once a month when I see that group of 10 or 13 brokers come out to Atlanta, and we sit there and we talk about how to get better. And I watch a guy like Darius get up and be real and be authentic and share everything that's made him successful with a guy that's right next door in Florida that's probably trying to take his business. But he knows if he's real and authentic, no one's taking his business. It's him. Yep. So find the right group of people and surround yourself with that. Find a partner and a teammate and a wholesale lender that's willing to invest in you. Trust me, you're driving their business. And I think, Chelsea made a good point about margin. And margin could still be good if you do this. It's simple. You don't need a loan officer assistant anymore. You don't need a doc opener. You have to do more to make more. So control your margins, and maybe it's the way to go by contract process, so you don't have someone that you're paying hourly to sit around and do nothing. It's about being smart. So it's not about the number of people you have. It's about having the right people that'll help grow your business. So don't think when you get in this business, I need a loan officer assistant because this guy has one. I need this because this guy has one. Don't be afraid to work and work hard. Darius will tell you, he shares it all the time. He'll open a file, close a file. He wants to do every aspect of whatever it takes to get that borrower to the closing table as fast as possible. So don't be afraid to work hard, because if you work hard, you'll have success and the money will come. You don't need to close 40 loans a month if you're doing the right thing by 20 people. So just keep that mindset of stop trying to keep up with the Joneses and be the Jameses, right? I think that's what will make the difference.
Okay, well, I can't think of a more positive note to end our discussion on today. Thanks a lot to you all for joining in the conversation. Really appreciated it. Plenty of great stuff for our viewers there, and great to hear such optimism as well about how things are going in the market. So thanks to you all for joining, and I'm sure that we will catch up very soon.
Thank you.
Thanks, guys.
Thank you.
Thanks for having the second best accent on this call, by the way.
Okay, well, that is just about all we have time for in today's edition of MPA TV. My thanks once again to our guests for joining us on the show. Thanks to you for watching, and we will see you next time.